Hello folks, welcome to another daily Bitcoin market analysis by Inspocrypto. Today we will start with the popular, it's not, but it would be nice, initial comment by Inspocrypto. We will talk a little bit about the expectations of inflation, expectations of pivot, forget this one, about the conditions of the US bank sector, and what central banks, at least in Europe, are thinking about the next coming crisis. In my opinion, we are not done with the crisis. We are just delaying it. So we are still in a crisis that is escalating. That's the only thing. What is happening? And everything started when central bankers decided to print cheap money for a long time. And that was the initiation of what we will see now as a consequence. I have tweeted yesterday, for example, a nice analysis where they were mentioning that almost 186 US banks in the US, they just were tuning their books to show how healthy they were, and it was wrong. Just imagine you would do exactly the same with your tax declaration. Just indicating, I'm not making any money. And, or like Tether just manipulating or even creating false documents, identification and documents to open bank accounts. Like, at least, I never have seen any proof or evidences, but that's at least what the news were telling us. However, if we would do that, obviously the consequence would be prison, jail, or at least a costly defender, lawyer, to avoid prison. But it seems that's not going to be the case for 186 banks, because it's not one bank, it's not two banks, it's a lot more. And yes, one follower with a big smile just said systematic risk. Yes, that is a systematic risk. I have mentioned since last year, I don't know how many times, that the whole thing is absolutely planned. The whole thing is programmed. So the output, we don't need to talk about the output. What will happen when? The question is, what will happen first that triggers a chain reaction? And that's going to happen. So if those 186 banks in the US is going to be in trouble, because, the only thing that they can do is use Fed overnight window or different programs to get cheap liquidity to maintain alive. Doesn't mean the situation is fixed. You remember my example of the sinking ship jumping out or jumping to the next sinking ship? The consequence, the result is going to be the same. The ship is going to sink. It just maybe takes a little bit more, but that's it. The ship is going to sink. So obviously, if we know that 186 banks in the US were manipulating their books, so we don't know what real data they have. Actually, we need to send auditors. All these auditors will make a lot of findings. They need then to prove that they fixed the findings. That's actually the process. That's not going to happen from one day to the other. But at the same time, the central banks need to keep working because they have a very fragile monetary system at the moment. So obviously, the Fed, like the ECB now just mentioned, they will raise the interest rates even more. They need to, because inflation is going to come, because governments' spendings are going to rise. So obviously that means that more money, more liquidity is going to be circulating in an economy. Now we can say, well, but banks, what they are going to do with the money? Well, at least they are not going to deposit this money to protect the deposits of their customers. Unfortunately, it's not going to happen because they are in a very, very bad situation. So usually they will look around to make profit, like many others are doing. Shadow banks, private equity, hedge funds. Also, I have mentioned, I mean, we have so many red flags out there. And just because no one imploded yet doesn't mean everything is fine. And that's something that I'm missing when people are tweeting. And also, some journalists on investing.com or other who are just saying, everything is fine. Yeah, it looks a little bit bad, but, we have hope. Well, hope doesn't save lives. That's the thing. I mean, that's actually the last step before, bad case or worst case. However, if we start to check a little bit what at the moment the situation looks like, let us make a little summary. Consumer confidence. Let us start here in the bottom with all the recent data. We are not going to look for December December 23? Or until, I guess, or I don't get that. However, we are just going to scope here April 2023. Consumer confidence from 62, we went to 63.5. Means consumers are spending more, they feel better than just before. Service PMI, that's the inflation, so the service inflation, that is one of the main driver of the inflation, not only in the US, went from 52.6 to 53.6, indicating that inflation is pushing up because wages could be up or because some other kind of service relevant products are now more expensive, and that's why the service PMI is pushing up. Non-manufacturing PMI lifted up. Manufacturing PMI lifted up. Business confidence lifted up, indicating, okay, even business feels like, and that correlates very well with the consumer confidence, they feel better. That's at least what we can see there. Now we can see that on the monthly level, inflation rate pushed up from 0.1 to 0.4. Now indicating, and it matches very well to the everything else. I mean, services pushed up in inflation, non-manufacturing, manufacturing inflation pushed up. Inflation rate in the yearly base declined by 0.1%. That's what many are celebrating. After the Fed pushed up, and not only the Fed, but the Fed, in that case United States, pushed up the inflation, the interest rates. Usually, and that was, if you remember what Jeremy Powell said in the beginning of 2022, that they would like to push up the interest rate. At that time it wasn't really clear how far, but they mentioned maybe 5% or something to fight inflation. But inflation maintains. So the question is how to fix this problem, this situation. I have mentioned so many times, nobody can fix that anymore. I mean, we could, but it's absolutely fictive and not realistic to think that we can make this year and go back to the pre-COVID phase, because COVID was one of the main drivers of inflation and the big disruption of a global economy. That afterwards, with an escalation between Russia and Ukraine, started to split the global leaders in different, or they polarize them in two different parts. We have now those who are, well, they would like to have their currency backed by gold, usually BRICS nations or pro-Russia China nations, however we want to call them. And we have on the other side the Western. The Western is, to be honest, everyone, it doesn't matter if he is in the East, but everyone that is supporting the policy of the United States of America. That's at least. And we have some countries who are struggling if they should support them, because with a bipolar world, you can imagine every single step you are going to do right now, it can have big consequences for your economy and for your geopolitical interest as well. So that explains why France now flipped a little bit. They were supporting the United States foreign policy a lot, and after Xi visited France, I don't know if Macron then afterwards visited China, who cares, but he started to flip. And now some voices started to say, well, be careful, because if we are going to be a tool of the United States foreign policy, that could be very problematic for our economy later on, related to China, for example, and Russia, and other countries like India, like Iran, like other countries. So obviously it's not trivial, the whole situation, but we have facts. And facts is we have two big world leaders at the moment, or bipolar parts, however we want to define that, who are now just fighting on different levels. Monetary policy, geopolitical means also military, and so on and so forth. So let us go just forward, and that's why I think that inflation will rise even more, because governments will spend more, while at the same time, to reduce the impact to the inflation, Fed and central banks like the ECB will rise interest rates even more. That will bring even more trouble to the financial sector. And of course, because now at least I'm not noticing any kind of discussions about the real estate market in the US or even in the whole Western communities. But it's looking absolutely very, very bad. Many hedge funds started to sell their properties because they see that the market is flipping. And I mean, that's another red flag that we have on the table. Non-farm payrolls lifted up from 165 to 253. Unemployment rate declined from 3.5 to 3.4. That's something good. That's really good. Well, currency pushed up a little bit, and stock market, I don't know this index, but it's indicating it didn't change a lot. And yes, that's right. The market, it doesn't matter if it's in Germany or in Europe in general or in the US, it's not reflecting the conditions of our markets, of our economy in general. And that's something that is concerning me much more than inflation or other data, because it's indicating they are extremely in disbelief and just doing whatever, that's what I mentioned just before. Big banks are like big container ships. If they want to make a 180-degree turn, it takes hours. They are not flexible. But I'm also learning that even small banks are over-regulated. They for themselves, they over-regulated them. I don't know why, to be honest. Maybe just to explain why they have so much stuff or why they have certain stuff. I really don't know. But even those guys are not very dynamic anymore. So indicating this missing flexibility bring us to the situation that they can't adapt to the current market conditions or economic conditions, indicating, and that's why, in my opinion, it's happening what it's happening, why those who are in disbelief or are just making business as usual, because they know to make a flip it's almost impossible in that time. And in my opinion, the only thing what they are doing is just, use the risk leverage. In just saying they prefer to go to use more risk and to make quick profit at the same time. They know it's risky. They know at any time something could implode and could have a big impact to the market, but they are not more in the situation to absorb that. So they are just going to make whatever they did since decades, or at least in the last 10-15 years when the money was extremely cheap, just because they don't have any other options anymore. Every single transformation takes time and money, and both is not more an option, it seems. So that's for the US. Europe, if we take a look, well, government budget, that was something that was surprising me, but it's even old. If we take a look here, March, well, let us take a look for something April. Do we have anything here related to April? Nothing, only March. Inflation rate lifted up a little bit, at least in the monthly, and the here declined in March, but nothing in April. Okay, well then we can go forward. Yeah, absolutely nothing in April. Well, yes, here optimism confidence. Oh, it declined a lot, really a lot. Consumer optimism maintains. Consumer confidence, it's cooling down, and housing, well, unfortunately, construction output, I think that changed a lot, so nothing to see here. On Japan, maybe, and the thing is, this chart here, it's this sheet, I really like it to compare and to see the differences. So trading economics, the problem is United States is a country, a single nation, while the European Union is a union of nations, and that's why it looks different, it seems. I don't want now to take a look to every single European country, to be honest. So we take the next one, because Japan is one key player here. Also when it comes to the monetary policy, because they are doing exactly the opposite of the European Central Bank or the Fed. So if we take a look here, for example, let us take a look if we see something in April. Consumer confidence, also here lifted up. Service PMI, it lifted up. Manufacturing PMI, it lifted up. So also here in Japan, the inflation is not declining. That's, I mean, at least the manufacturing and the service inflation maintains and is pushing up. Interest rates, they decline once again, even not, or they are maintaining. They have a negative interest rate, means if you go there, they will give you as much money as you want and give you $1 for it as well. Then, well, stock markets also here maintain, so also here not indicating that the stock markets there are really just reflecting the situation of the data. Unemployment rate in March rise from 2.6 to 2.8. Inflation rate declined from 3.3 to 3.2%, while the inflation rate, the monthly, in March was previously in February declined by 0.6%, and in March it went up by 0.3%. Every central banker would say, well, taking into account this data, you should start to push up the interest rates. The big question is, because Japan, big risk or nightmare is to flip to a deflation. So they need a high consumer confidence. They need consumer who are spending their money. That's what they want. But if it's going to work, I doubt. Everything here old. Unemployment rate, as just mentioned. Productivity declined. Everything else is maybe just Tokyo Core CPI. Okay, that's great. I didn't see CPI Core, for example, also lifted up from 3.5 to 3.8 from February to March. So everything is just indicating that also inflation in Japan is lifting up. It's not declining. So and also another thing we should take into account is, wow, that's crazy. Construction orders in housing. Look, that was in February and then to March. So also, real estate market, as soon as it implodes, it will be a huge tsunami. However, for Japan, they did, and that was something that really pissed off a lot the Western countries, or countries like the US, for example, because Japan is one of the most closest ally of Japan, is that they did a long-term agreement for oil purchases with Russia to a very low cost. And of course, that's for Japan, that's a good thing, because they can guarantee that they are getting a solid supply of crude oil to a very low price that, of course, will bring their industry an advantage to compare against the Chinese, for example. However, that wasn't, as you can imagine, it wasn't really the feedback from Europe or even from the US wasn't that good. So we have checked now, we had a good summary of different data that is indicating us that, well, maybe consumer confidence is lifting up. People feel a little bit more comfortable, but the hard facts are indicating us that inflation is not over, that economy is not doing better. I mean, yeah, okay, unemployment may, but I have mentioned so many times, labor market statistics are the most manipulated by politicians. It's the most. I mean, you can have an unemployment rate of 0. Doesn't mean that those who have a job can survive with this job. If the inflation is going up, and these guys are blue-collar guys who are, making just few bucks per hour, and at the end of the month, they don't have enough money to pay their bills, who cares? I mean, in the statistics, they appear to be employed, to have a job. But is that good for the economy? No, of course not. So when I take into account that labor market statistics are extremely manipulated, usually I don't take a shit of what they are saying about the unemployment rate, to be honest. I check other figures, like, for example, services PMI, non-manufacturing or manufacturing PMI, because they are the main drivers. The whole economy works based on services and manufacturing. That's what we have. And services means, for example, the IT company that is developing software for another company. And yes, that is part of inflation. And that has a big impact if the companies need to invest more for any kind of transformation of their digitalization agenda, for example. Many people doesn't have that in mind, but that's the fact, that's reality. So take into account all the information I shared with you, with a little bit also my interpretation and what I'm seeing. The current situation that at the moment is stable is very fragile, indicating, hey, if something implodes here, it will rise in pace, and the impact and then the collateral impacts that we will receive will be extremely big. That's why ECB today just mentioned they think that the US bank crisis could swap to Europe, something that obviously it has to do. It will have a global impact because US money is spread everywhere. That was the global agenda. Every single bank, it doesn't matter where, was investing in different other countries. So if we have now a big problem in the US, it's not just an US issue, it's a global issue. And Europe and the US are both very well connected. Also their money, their liquidity flows vice versa. Sometimes more from Europe to US, then from US more to Europe. Now it seems, I don't know, I didn't check the data since a while. I need to check that. But means, of course, it will have a big impact to Europe. Not only to Europe, to other countries as well. And so the first thing that they are saying is the ECB will raise their interest rates even more because they are expecting that governments will raise their spendings as well to maintain, to delay what will happen anyway. Unfortunately, and that will happen in the US, it will happen in Europe, and I think in many other countries as well. And I think that's going not only to implode many of our red flags that we have on the table, but at the same time it will escalate the situation gold versus US dollar. And that explains why many institutionals, not saying that every institutional, but many institutionals are at the moment demanding more gold than US dollars. If you like it or not, in my opinion, I have also mentioned that I'm much more a fan of silver at the moment than of gold because, green agenda and even China is making big progress in technology that is good for our environment. So it seems that is really part of our future. And so they will demand more silver. I was reading a nice analysis where they were saying that for many silver miners, it is more profitable just don't to rise the supply to maintain it because the price goes up, and of course to make more money. So if that happens, it will be like the crude oil effect that we have when the Ukraine and Russia conflict started, where the silver price will go up extremely. Gold, something that even it has a certain volatility, it's not Bitcoin. So, for many, it would be a nice spot to park their money. But if you want to invest, and in my opinion a very risk-less investment, silver should be on your list as well. So now let us go forward. So the weights ratio 30 days moving average, as mentioned yesterday, expecting to push up, and that's what happened, because just, the trend absolutely clear. If even it's going down now to 49, so I would expect that soon, maybe tomorrow or the day after, should start to decline. Then we need to see if it's going to push up. Of course, it will push up more. It's just indicating that whales on a daily base are sending more to centralized exchanges or retailers, something that I can't see. I really can't see. I see that the market activity is declining, but I really can't see that retail is leaving the market. I just see that big entities are leaving. Those who really with algos and different, they use, but retail, at least we are receiving more retail wallets indicating they are buying even tiny amounts of bitcoins. So it's, in my opinion, that's more driven by whales and big entities and less by retail, indicating they are just sending more bitcoins. And that also means that usually in the short term, the sell pressure should rise. In my opinion, the sell pressure declined a lot. Today it wasn't really big, to be honest. Also, the volume cooled down. And I guess over the weekend we will see again, such kind of price move. Still thinking we can go more to the up before more down, because everything it's indicating they are still in distribution. If we take a look to the weights ratio 1 hour time frame, also here you remember, and you can see it declined. It's just doing, now we are between 87 and 100. That's why the price is declining at the moment. But at the same time, the central exchanges received more stable coins. And even if we check the 30 hours moving average in weights ratio, we can see it's declining. Well, that wasn't that good, but if we see they are declining. Once again, they prevented to break the 90%. That's magical, because usually then it's time to go short, because when we break the 90 means they are in short term preparing the next push down. Today I'm not expecting anything big, to be honest, related to at least to the downside. We will see. So if we take a look here, we can see that today more green than red, indicating we received more bitcoins to centralized exchanges to spot than outflows. So yeah, let us go forward. Yeah, also here we see they are taking, they are cashing out. The red curve here is indicating outflows in stablecoin 64. At the same time, we received just 5 million. I'm not seeing here any big stablecoin inflows at the moment, but also not big Bitcoin inflows. So 455 last hour. Let me just, we can see here as well that, they are taking out a lot of stable coins, so indicating they are selling just more than buying, and so cashing out. That's what we can see here at the moment. So also nothing changed really. Let us go forward. So we can see that today it's red. So today it's red. It flipped from green to red. Today we received 4,700 bitcoins more than outflows, In the last 4 hours, even 2099. In the last hour, it's neutral, indicating, you know, the if you want to say the volume delta, or in that case the net flow, or the inflow outflow delta. No, that would be the net flow. Jesus, the net flow delta is 0, so we don't have anything in favor. Now the density of the bars are rising once again, usually indicating we should go a little bit more down, but at the same time we can also see that they are taking out, for example, in the daily yesterday, I would say, I'm not sure if that's today. Yeah, well, it seems it's today, but it doesn't make sense. No, it was yesterday, 14,000. Yeah, 14,633 Bitcoins. And we can see here as well that in the last 4 hours we received more, indicating they want at least to push out more to the downside, or they are expecting to push up and distribute to the upside. It would be also possible. You can see here twice, 3 times 2000 Bitcoins it seems. And now also here you can see that now the Bitcoin balance on centralized exchanges are flipping. They are bouncing here and now lifting up. We will see how far they want to push up. Yeah, we will see if 30K or 31 was the top, and we will go down. And you know, I'm still saying that even we could go more up, the bottom is not in. So let us go forward. Well, also here, unfortunately, I always need to adjust my charts to 0, set them up here a little bit, so no. And if we take a look here, we can see the trend is obviously not bullish. Funding rate now pushing up, indicating they are longing more than just shorting. Open interest push up very much, and it's recovering at the moment. And leverage ratio, we can see what the leverage ratio is doing, almost the same like the open interest. So that's at least from here what we can see. We see here that we received since midnight more money to stablecoin futures, it seems, while also more Bitcoins to derivative exchanges. Both can have different reasons, because in my opinion it only makes sense to use your Bitcoins as collateral for futures if you are expecting that the price could go up. But it seems that mainly miners are using their Bitcoins also when they're expecting that the price goes down. And stable coins usually, well, it doesn't matter, you know, stable coin is neutral, indicates you can push up the price or down, who cares for you. If we take a look, yesterday they liquidated another 1,730 Bitcoins in longs, but also 1,100 Bitcoins in shorts. So almost 2,800 Bitcoins. We can see that the funding rate now is pushing up hard, while the leverage ratio, the aggregated, is declining with the open interest. Now let us go forward. The Kingfisher. Oh, I forgot that once again. I'm not, to be honest, I'm just using the Kingfisher for you, because I know that many are using the Kingfisher. At least I'm not using the liquidation clusters. I not really care about. Nothing changed, only shorts on Bitfinex, 42 millions. Still indicating they're still expecting to go more down. You know, in my opinion, we are almost $2,000 away from our planned destination of 25K, but we will see. So almost the same on Ethereum on Binance, and yeah, that's it. So let me prepare the Kingfisher first. Okay, we need to skip it because I don't have any Bitcoin or something to send them. Yeah, let's. I need to fix that as soon as possible because that's really crap. I just forgot it. I forgot it just to spin, or at least to buy a subscription here. I'm sorry, but as mentioned, I really don't care about the Kingfisher because, in my opinion, at least when it comes to the liquidation map, in my opinion, it's not really, yeah, solid. But well, in case I will have another opportunity to spin. Oh, in one and a no, we will not. Well, tomorrow then. Let us go forward. So the gamma is telling us the magnet is a 32 for the bulls, 30k at least the next level. Otherwise, the third highest bar is a 28, indicating $1,000 up. If we take a look to the bears here at 27, looking for 27. That's where, well, we are on the way to 27. If we break 27, 26 should be next, and 25 would be the last. Well, 24 maybe, between 24 and 25 would be the last range for the bears. For the bulls, 31, 32. So the GAX is indicating now we are at 0, indicating it's neutral, and we can go up, we can go down. Market maker is not doing anything, so we will see. Now let us long ratio call spread. Okay, 3,000 lots. That's okay. We will see. I hope it's not 40 positions because of that. Long strangle, short straddle, and bull call spread. We are going to check all these four. To be honest, that's here the most important one because of the lots. Everything else, I guess, it's once again mainly retail trades, but we will check. So we start with the long ratio call spread. The long ratio call spread is usually trade strategy you would use if you are expecting a sharp price move to the upside. Let us see. Long ratio call spread. Oh, that's just one. Okay, that's great. Until end of June, expecting a price between 32 to 35. So we still have 6 weeks. Until then, we can go down to 25 and then push up very hard. I mean, the premium, it's almost, they paid a little bit more, almost $30,000, but they sold also, so they bought 35k call, 2,000 lots, and they sold 1,000 to refinance. However, it's a solid, in my opinion, solid trade, indicating they are still expecting to push up, hitting 35k first. So long strangle is here, and yeah, that's where a lot of retail, of course, is trading it. So the long strangle is just indicating they are expecting a big price move. They don't care to the upside or to the downside. So if we would from here just nuke to 25, that would make gain. If we go from 27 directly to 30, they would make a good gain. They don't care. So however, if we take a look here, let us take a look. That's a big one. They are indicating until end of June to see a price below of 26k or above of 29k. Solid trade. Also here, to be honest, a very solid one. So let us go forward. Everything else is just retail. Yeah, it's retail. Just few. I mean, 24, 31. 24.31, 24.31. So they are expecting we will see a price below of 24 or above of 31. One of those scenarios have to happen, so they have a solid gain then afterwards. Short straddle is exactly the opposite of the long strangle. If the long strangle is expecting a sharp price move, the short straddle is just saying it's nothing will happen, just absolutely nothing. If we take a look here, they are expecting to maintain a price until next Friday, so next week's Friday, to maintain a price around of 27.5. Oh, let us see. Yeah, 27.5, 27.5, 27.5. It's short term because they are expecting now for, I mean, even 27.750. Okay, you guys are almost done, I guess. Or we go up. That's also possible. But however, everything looks like 27.5, 27.5. We are at 27 at the moment, so we should go up once again. And that's at least what they are here expecting. And bull call spread, last but not least, the bull call spread is also bullish. And the bull call spread is almost here. Oh my god, that's so retail. I mean, they are expecting here to see until end of May a price above 31. Nothing big, really nothing big. I mean, $750, who cares? Or yeah, 31. Many are expecting to see a price end of May above 31. Retail just making such trades like, for example, here to see a price above 36k. I think that's just casino. That's just a gambling trade. Maybe it works, but they don't care. That's it. Let us go forward. So if we take a look here, we can see that that's, for example, Binance BTC USDT, and just indicating that was a little, dead cat bounce. So we bounced here to decline afterwards. BUSD is also, I would say, from trend declining. USD declining a lot. And futures doing exactly the same, as you can see. So yeah, it looks very, if we take a look, they are almost everyone doing exactly the same. Now we need to see if they are going to use this dead cat bounce as a double top, double bottom, and then push up once again, hitting 27.5, for example. It would be possible. We need to see. BUSD, as mentioned, doing a little bit a different thing like the others. Bitfinex, they are extremely bearish at the moment. Bybit doing exactly the same. CBD indicating more distribution than accumulation. These guys doing exactly the same. That's Coinbase. So only Bitstamp declined a little bit, but maintaining. Kraken also just reducing. Even Gemini now, I mean, they declined a lot and also used the dead cat bounce. But yeah, also here nothing big to see. If we now go first to the entities and check them, we see that, look, retail, at least wallets with less than 1 Bitcoin are pushing up really hard, indicating retail is still here. I mean, or at least those who were buying, well, it's not shit coins, but other crypto assets than Bitcoin, now they are flipping to Bitcoin. It's also possible that we are not receiving more retail, but those who were just trading other kind of crypto assets are now, buying Bitcoin as well. These guys pushing up, these guys declining, these guys maintaining, these guys declining, these guys lifted up, and these guys, well, nothing. Let us take a look to the count of wallets per entity. yeah, pushing up, even yeah, not that big anymore. This guy is pushing up, lifting up, maintaining, 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 and well, it's just 4 wallets. So then we will check stablecoins here, for example, and let us see if we are receiving anything big here. Wow, we received, wow, almost 4 billions at the same time, an outflow of 3 billions. That's big. So, but at the same time, we had here almost 3.3 billion outflows and 2.75 billion inflows, and then afterwards another 2.58 billions. In my opinion, stablecoins coming in more than outflowing it, usually indicating they are buying there. Also here, for example, yeah, we have some blue bars, but more green, yellow, indicating they are buying. They are sending more stablecoins to centralized exchanges. Anyway, it's to centralized exchanges, maybe also to derivative and not spot. And that's also we need to explain something. This chart, it's not indicating they are sending Tether, for example, to buy Bitcoin. They can buy Ripple, they can buy, it's just indicating they are sending stablecoins to centralized exchanges, not saying they are sending them to buy a certain asset. Here I would say it's almost neutral. That's USDC and BUSD. You can see big volume happening here, very strange. And GUSD also doing the same. So also here nothing big. We can see that the market maker is still sending Bitcoins to centralized exchanges to sell. It's not linked to any miners, it seems, miner wallets. Weights ratio on different exchanges declined. Also here the demand for ETFs is declining, so they are reducing the balances, and also the spot volume ratio to futures volume is stabilizing. Yeah, that's almost it. So usually when we have such a distribution at the end, we should have really hard candle wick that goes to 25, maybe a little bit lower, to make some bulls really nervous, and to bring, of course, the bears to go short with high leverage, and then afterwards we will push up once again. It's pure distribution, it's slow motion, and they at the moment they don't need to have to unload hard. And you see, I mean, 25.5 on Coinbase is at the moment where they are waiting with big liquidity. We need to see if that's going to be the local bottom and then up, or if that's just to maintain here for 1 week, 2 weeks, and then more down. That's something I don't know yet, because they are now bringing more liquidity even to 23. Bitstamp. On Bitstamp, exactly almost the same. Also 25 reinforcing here. So in my opinion, we are very close where the price starts to see a little bit more green, maybe to go down and then up to 27.6 once again, 27.5, like the gamma was indicating. Binance, they removed, for example, their order here 28.6 now. Instead, they are reinforcing also to the downside everything between 25, but also bringing here at 24k. So we need to see, I guess, 25k. Maybe for a swing long it would, wow, you can see they sold now at once 20 bitcoins. That's what they are doing. That's really interesting. If you start to see then 60 bitcoins buy and so on and so forth, you know, okay, we are close to push up once again. So that's why this chart is always running and behind. So yeah, so it looks very interesting what they are doing, and for a swing trade, maybe for a solid one, 25k or maybe a little bit earlier could be extremely interesting. You can see that they are here also pushing some, bringing some liquidity to buy at that levels as well. So BTC BUSD also here between 25 and 26.5. Bitfinex at the moment waiting at 26.7, maybe for a little bounce, but they are instead waiting at 24.5. OKEX spot, usually nothing, exactly nothing. Kraken spot now waiting here 26, also 26.2, but also 25.5. Also interesting what they are doing. BitMEX, nothing. And now derivatives starting with Bybit and US dollars, nothing. Now with Tether, you can see that, you remember yesterday they did exactly the same on the opposite, and then the price pushed up. Now they are just pushing down. Now Binance indicating we should, maybe they are going to trigger to 26.5 and then push up once again, because usually that's indicating, okay, we are almost done, and afterwards we should go up, in my opinion, a little bit more, hitting 27.4, maybe 27.5. Could be a short-term swing trade here, possible, because usually you can see what they are doing when they are bringing some orders here, the price go more down, and now they are doing exactly the opposite. Usually it's indicating, okay, we are close to the local bottom, and then push up before more down, for example. Now BTC BUSD, nothing to see here. Bitfinex derivatives, nothing, only there at 27.8. Kraken futures, nothing. OKEX futures, nothing. And Deribit indicating here they placed more liquidity between 25.7, 25.2, and even lower at 24. So yeah, I think we can go a little bit more lower. That's it. So if we go once again to my 1 day time frame, we see that at the moment it's now the last level. I guess we will make, once again, we will push up from here just to make higher lows, and at the end to break and to go more down. We will see. However, at the moment, if we go down from here, we would go to 25, between 25 and 24,000. That's at the moment what also the trend line here is indicating. Means we need then a sharp price move to the downside to push up once again afterwards, or even to break and to go then to the next one, that would be a 19.5. I can imagine if we start to dump hitting 19.5, I would like to see some faces of the bulls. But now we need to see step by step, really step by step what they are doing. It seems that was the retest, got rejected, and today, instead to push up to retest again, they decided to go down. We will see how it ends the day, to be honest. But we went from 27.6 now to 26.9, almost $700-800, and we need to see if that's going now, if that's it for today, or if we go even more down. Then obviously, as just mentioned before, 24-25k where we have found a lot of liquidity should be the next step. Yeah, also if we take a look for here to my 1 hour time frame, you can see we got rejected very clear here, and at the moment we are in slow motion retesting that area here, and that can let us push up once again here to liquidate. But to be honest, why we should do that? I mean, at the moment it seems we have much more longs on the table. So usually then I would expect to go even more down, because it seems many are not expecting that. That's almost it for today, guys. So I mean, we have talked about options, and you see options are just indicating, hey, for the next weeks we can go up 30k, 31k. The GAX is also indicating 30k. 27.5 would be at least the next close trade development, what they expect, or go below of 27 and maintain, and that means also to go 26.5 and even lower. So we need to see what is going to happen next. From here it's going to be now very interesting what it does. If it breaks here, in my opinion, we will start to go, but it's slow motion. It takes a lot of time, you know. I mean, we are not doing a big candle. Maybe they are going to start to do it to liquidate a lot of longs. So that's it for today. Big love. We will see us tomorrow again. Your Inspo. Trade carefully. Bye bye.